Hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. Good to be back with you all. And today I want to take a look at certain setups in the market. Of course, we want to look at our standard swing trade time frame setup on a daily chart. But there has been a lot of discussion as of late, and I did get some feedback from some of the topic requests about, hey, can we narrow that time frame down? Some traders, some investors are worried about the longer term time frame, maybe being a little bit in the overbought area, a little bit overpriced maybe in some stocks, and can we narrow this down to a shorter term time frame? The good answer, the answer is yes, we can. We can do that, and we can do it with an intraday time basis as we set up multiple time frames as we look at the swing trade. I want to take a look at that today because that is an interesting way to kind of narrow down potential risk and reward and get a couple of different setups, like on a short-term basis, like something like intraday, 30-minute chart. Do we swing trade setup on a 30-minute chart? Folks, all the time. So I'm really interested in diving into this discussion and layering in some multiple time frames along with it. Uh, Great to have you all here. We've got Andrew, AJ, Beth, live in the fast lane. Hello to you, Will, Lewis, Kevin Scott, Riceberg. Welcome to you, as well as Richard. Great to have Richard on board, and Jim, folks, and Posh, and others, everybody else. We're joining the chat as well by Cameron May. You can follow Cam and I on X. Cameron May, CS, spell that right. He's got some great stuff there. Mike Fairborn, CS. Cam is a good friend of mine, colleague. Great to have Cam on board, as always, helping out in the chat in my class. I help him out in one of his classes as well. So let's get the show on the road here, starting with some disclosures. Folks, information here is for general information purposes only, should not be considered an individualized recommendation. Now, as it states here, the paper money software application is for educational purposes only. Investing does involve risk, including the loss of principal. Now, there's no guarantee that the execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results, and dividends are not guaranteed. Look at some of the future disclosures, and I just wanted to state here, the futures and futures options trading does involve substantial risk. It's not suitable for all investors. A lot of times what we'll do is we'll reference the charts. We don't dive into the actual securities themselves, like the contracts. But we will look at the charts, and I wanted to just lay that out there for you so you can see that. All right, well, let's do this. Just a quick review, folks. If you are not familiar, and many of you are, because I recognize your names and I see you week to week, and it's great to see you back. But if you're not familiar with swing trading in general, big picture, you're seeing a lot of it right here, what we try to look at, and that is really trying to pick up the strength of the moves, kind of the meat of the move within an upward trend, where our idea is to try to capture this move, or to try to capture this move, right, to the upside. And what we're really focusing in on here is ultimately kind of what we're seeing here. What are the indicators showing us? What are the patterns showing us? Folks, this is a bull flag type pattern. We see a lot of bull flags here when we do get a swing trade over on the right-hand side here. And we're just looking for that 3 to really 14 days higher is what we're really kind of our emphasis, our focus is at. And so I just wanted to state that that is kind of the range that we focus in on here. We try to put all our efforts into identifying the trend. What indicators are showing the possibility of a move going higher? What price action? We've taken a lot of looks at price action. The Cajole, the close above the high, the low day, which you are actually getting right there, oftentimes can start a move. You've got to close above the high of the low day. We've looked at that. We've looked at volume. We've looked at, of course, within a price pattern. You're seeing a lot of that I just mentioned off here on the left-hand side, days to weeks. We're looking at construction of a price pattern or whatever it is we might be looking at. There is also, of course, the bear flag that we see as well. So just a quick reminder for those of you, as I am seeing some new names in here that I haven't seen before, that's what we're really looking at. It's that short distance, whether it be like, for example, that's a bear flag coming on down. A key distinction between the bull flag and the bear flag, folks, is the gosh, I always put it up here because it did take me, when I got trading, really a couple years. I understood the trend. I knew the importance of the trend. And if you would have asked me, Mike, are you following the trend? I'd say, you bet. Until I realized I wasn't even following the trend sometimes. And the trend is, lower lows and lower highs in this case. That's the key identifier, distinguishing feature of the bear flag versus a bull flag. The bull flag is trending to the upside, and that would be true for a number of different patterns. And so trend can really play a key role. Once that trend gets in motion, a lot of times it stays in motion. And the concept of a trend is a statistically valid concept. We see trends in nature as well. And so they are used in the market, and there you go. So that's pretty common on a lot of these folks. I just had Bitcoin up there. And just a quick note, because I did have Bitcoin pull up on the chart. I wanted to state, because we might look at some of the crypto. We do from time to time. It just happened to be on my screen, and I look at those from time to time. But I did need to state, I'm sorry about this, but I need to state a quick disclosure, because I did post that there. Digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies, like many of the regulations and consumer protections that legal tender currencies and regulated securities have, due to the high level of risk, investors should view digital currencies as a purely speculative investment. There you go, instrument, a purely speculative instrument slash investment. All right, here is the S&P 500, but yes, it is an instrument to trade. All right, now here we go, S&P 500. So this ties into a lot of what I've been talking about, and some of the topic requests, I think they're very, very timely that I've been getting from the group. And I appreciate those requests, because I do like to field those when they do come out. But that's this. We've been up for a little while here. We've blasted through the seasonally weak September. We didn't get a seasonally weak September. In fact, we got a stronger September. But prices could be a little bit high up here, some might say. And so what they tend to do is maybe look at a shorter term time frame to maybe try to help mitigate that risk a little bit. I'll show you how that's done as we line up multiple time frames here just momentarily. Before we get into that, though, let's just do a quick look at, take a quick look at the market. You can see we're still, you can say we're still clearly above our ascending triangle higher. And this is really interesting to see, because we got one here with our trend. We got another one right over here with our trend. We broke up higher. RSI has been showing strength pretty much across the board for a while, so keep that in mind. That's been quite interesting to see that strength in place. Now, in addition to that, let's look at the NDX, the NASDAQ 100. And as you can see, that NASDAQ 100 really quite strong as well, busting through seasonal weakness and higher highs, higher lows. In fact, just yesterday, we had another all-time high, I think, across all. A good quick way to check on that, just to go down here, just do something like this. Just go like a 15-year monthly, but easily, folks. The only other time we even got close to this high was, it was back during the dot-com, and we'd held that high for a long time. Look at this. That was the dot-com high. Remember when it took us so long? You realize how many years it took us to get there? That is like 1999. Party like it's 1999. And there you go. I guess the first part of 2000. So it took us about 15 years to get back up to that prior high. But look at us from that point. Look at the price action, just the price move from there. Kind of crazy. Just a quick note on that. Okay, so we've seen that. Let's talk about some of our trades from last week, some of our swing trades. And this swing trade was a very fortunate one. This one comes out from time to time. This is our first one as we review our trade. This was Intel. And you guys remember us looking at this trade, placing this trade. This trade, as we were looking at it too, let me just back out of here real quick for one moment. Here was our 3-year weekly. Now, these are weekly bars, but we did notice something interesting happening over here. And you can kind of pick up on it here. Look at this. Look at that. Blip and flag right there. We flagged before we broke. Price action, market sentiment can lead sometimes fundamentals. It can lead news sometimes. We don't know what's going on behind the scenes with the smart money, but we can say this. We saw some pretty big dips every time we came back to that 25. Kind of an interesting round number. We came there, we talked about this, we pulled back down, but there was something interesting happening here on that daily chart that made that swing trade kind of unique, because here was the deal. We were at resistance, right? That is, by all intents and purposes, you can call it longer term, and that is weekly resistance right there. We'd hit 25, not once, baby, not twice, but 3 times at least. I mean, 3, these are weeks here, through here, and here. So I say 3 times, but it was actually 3 several times, but over three, like in three key areas, maybe four there. But what we're flagging. And so I said, I mean, this is an interesting point because as we look at this, we'll go back to our daily now, kind of talking about what we were seeing. The flag pattern was happening right up here. And we saw, my gosh, it's holding its gains really super good. We hadn't seen that before. Previously, what did we do? We hit that level, break. Hit that level, break. This time, flat. In fact, it was like an ascending type triangle right there, if you can see what I mean. Look at those lines coming up. You can see that. I mean, that upward sloping trend line is there. Incredibly light volume right there. Incredibly light. In other words, we had excellent volume on the way in, right over here, really building up, which we love to see. That has a really sweet influence a lot of times on our money flow line. The money flow was just great. So volume tied in with the pattern, and we saw it holding near. We still said there is resistance, like right through that level. It's 25, 26 area. But folks, we stuck with this, so we put that trade on. So this one turned out to be a winning trade, okay, on Intel. In fact, we got in like right in through here, and we got out, we got out at around 30. Because what we did is we did a full T2 target of the swing trade. Let's talk about the T1 and the T2 again, just real quick. In fact, let me just draw the lines. Let's do that first. So here, the prior high of the move, that would be a T1. So sometimes on the swing trade, let's look at the flag swing, it comes down here, and we're looking to trade out here. We didn't take that. If you go back and take a look at last week's discussion, we said we didn't want to go with the T1. We thought that the volume, some of the strength building up, and really holding its ground so well could mean that there could be a price move in the works. So we elected not to go with T1, but some traders could have. In fact, they could have put half the amount in if they wanted to. They could put half the order in, as in terms of a potential exit level range. They could have said minus 50 there if we hit it, and then the other minus 50 wherever our target was at. We did go for a T2 target. The T2 is this range right here. Let me just swap up some colors off the bottom to the top. Okay, this is the projected price range we're looking to make off of the lows or near the lows. There are a few different lows in here. We take that same price projection and we add that price up to the top. And I think we did the most conservative one. In fact, I think if we chose this bottom, you'll see that 30 right here is very, very similar to this move right there. So we were very, very close to a 30. Now, we got more than 30 right there, didn't we? Yeah, we broke above 30, clearly. So when we got out, our trade came in at a higher level. That was a nice little exit for us there, but we did go with the T2 for the full trade. It gapped above our target, but we were happy to capture it. Where would the opening be? Folks, it was right there. Maybe you guys got a successful paper trade on this guy as well. Not sure, but that was the trade, and that's kind of what led up to it. But you could see why, trading with at least the short-term trend. Another thing we did point out is that even this low right here, right, that was down towards the bottom, we were still making higher lows here. And then you had your ascending triangle. So there you go on that one. All right. So any questions on that? I think that was pretty straightforward. We got out of that trade and we are done. Next one we did was PSX, still developing. Now, this stop, I did push it down just a little bit below. And the reason is, I think we did, either I talked about this in the class right after. We just said, hey, you can determine where you want to put a potential exit level at. But a couple points on that just in just a second. I'll hit that in a moment. But notice up top here, we've got the trend. How's the trend doing? This is a little bit more established than it was for our Intel trade. The trend itself, pretty clearly, left-hand side of the screen, not all the way to the left, but sort of in the middle, moving to the right, higher highs and higher lows, a similar high here. And we really kind of flattened out right there at this level. We really kind of flattened out near that 130 level. We've got our potential exit level. Remember, again, the stop is not a guarantee of an exit at that particular level. But it does, once it gets triggered, it competes with other existing market orders. And by the way, having a liquid stock can be helpful at times in that regard to getting a fill that you're after. It's a little side note, but that's just got a potential exit range. We're trying to trigger that exit order there, okay? So you can see that, but notice we're getting something somewhat similar. And we talked about this previously, and that is when prices come up and they just hold. You can see the flag. These are noted for the flag pattern. It looks like a flag, right? Kind of like a flag, but that's a flag, and it's also referred to as not a bull flag, but a bull flat, really, really holding its range. Now, this is not the first time in this trend that we've actually seen this. Let me just draw your attention to this right here. Right here, we dip back down, and you could say there was a little bit of a sharper dip, but we held that, and it flagged up higher, right? There was another little flag right there. What about right there? Consolidation range after a longer-term pullback, but we held it, and we rallied up higher. We're doing the same thing here. The only difference is that with this run, this high, we dipped. This high, we dipped. This high, we dipped. This high, we held flat. And so it's not one of these traditional kind of bull flags. It's more like a bull flat. And those have been known to be just stronger moves. Now, has it broken out? No. By the way, Intel was kind of ascending up too. This is just staying flat. Didn't have quite the depth of the pullback, but it's been going flat. Still noted for kind of stronger moves by a lot of technicians. They just will oftentimes say that, volume down here was pretty good. Collectively, we saw that on our money flow line. You can see over here, money flow really trending up with price action over here too. Did we clear some prior highs? We actually did. We talked about this over here. So this is kind of a steady, kind of wait and see how it goes. Now, I do want to draw your attention to this. There could be a longer term sort of a flag pattern over here that could be developing. This could be actually a longer term flag up top here. Do you see it? Maybe on a weekly chart. And this is just the beginnings of a weekly. There could actually be a significantly higher price projection, or what we talked about last week was a shorter price projection. Let me show you how we can get that in. So if we're looking, I'm going to do short and long so you can see it again, as we're still stuck in that consolidation range right there to there. Flag, pole. You can see the flag pole, and then there's the flag coming off of a side of it. If you go down here, bottom right-hand corner, in the drawing tools, and go to the right of the percentage, not the retracements of the Fibonacci extensions, you click one time, click to the high, and then we say, what do? We measure off the bottom, the low there, and that is the 100% target range as a T2 right there. Oh, I better point that up a little bit. That's our T2. T2. Okay. T2 target. All right. And so there you have it. Now, T1s are really, really hard when you're in a kind of a bull flat like that, because, we're hitting the T1 on an ongoing basis. So oftentimes it just might make more sense to go with that number. What about the longer term? If somebody said, well, Mike, that's cool, but I might have a bias on, oil that's quite high. So maybe I'll take half off the table there, but I'm going to try to let the rest run with a longer term type of move. Well, that's the move right there. That's a long-term flag pattern, and there's your T1 T2 now. It's at 161. So it's almost like it was close to like 9-10 points higher. Don't quote me on those numbers, but you can throw them back up if you wanted to see it. But do you see what I'm saying? It's right there. In some ways, this is similar to Intel in a sense that it's stronger off the bottom in a sense. We've already begun to trend up. But look at this. Look at the highs here. Where are we? We're still kind of in that range, which is fascinating, because if we were to break up over here, there could also be potentially a measured move. And voila, what does that look like right there? What does that measured move look like? See the distance there? The low to high? Well, that could be our range up here. Exactly what our longer term flag pattern could suggest. And that's why I threw it out, folks. For that reason and that reason alone. Okay. Now, let's see. I caught my attention here. It said, Chris says bearish divergence RSI. Okay. So here's the thing to consider on that, Chris. It's kind of tricky sometimes, even on these flag patterns, to get a strong upward move. Now, it's divergence from here to here? Let's look at it this way. Chris, I can see what he's saying, but I want to get this point across. So look over here with me. Here is our RSI. Here's the divergence off the side. That is the peak right there. Okay, are we below that level? We're slightly below it right there in terms of closes. But you're right, it did pull back. Now, one of the things some traders will say is if you can hold, and I did a whole ThinkScript session on this, between 50 and 40 on that RSI on the pullback, a lot of times traders will say that's a positive if you can do that on the pullback, okay? One of the things too, it's more sensitive to the upside. Notice we're getting a little bit of a move here, a little bit of an upward move. It could start to actually show some strength and break what? This is something to keep an eye on. Remember, we can put these trend lines on right on the indicator itself to give us signs, early warning indications of maybe some strength. So I will say it has been going down. It's true. But if you start to break this and it starts to spike up, well, it could fulfill that pattern as well. Just some thoughts. It doesn't have to, but I was just going to show you that, yeah, you could utilize something like that as well. But I like your point because there is some sensitivity from that RSI. It's sort of a sensitivity indicator, isn't it? Kind of shows us along the way. Folks, those are the two I wanted to show you right there. But I wanted to talk about some of our other trades as we get into our new discussion today, looking at that shorter term, and kind of setting up that intraday swing, if you will. So a couple of things I did note that some of the healthcare we've actually been talking about in the markets and sectors class, which, by the way, let's see, and when October hits, that's going to be a class on Friday. So we'll end the week. That'll be the last class of the week. We'll actually be looking at markets and sectors and seeing what's been moving, what's been beating earnings. So stay tuned for that. That's going to shift from Wednesday to about 1 o'clock. Yeah, 1 o'clock on Friday. So, sorry, that's my time, 3 o'clock Eastern time on Fridays. Just as a quick note there. Okay, a couple of these that have been showing strength as of late. There is CAH, Cardinal Healthcare. Look at it going sideways right through there. Oh, long-term, possibly a long-term. I'm going to just throw this out there to let you guys see this, but we're seeing some strength maybe in healthcare short-term. We'll see if it unfolds because this was a long upward trend on CAH. We go back and I can show you that. But you can see that's kind of like a flag pattern off a long-term move. That's really the biggest bar that we've had to test this sideways channel that we've been in for quite some time, actually. So that could be quite interesting here, too. Look at this with me. Here's a company. Now, this is a REIT, a real estate investment trust. But notice, too, you know what it's in? This guy is in, if I can throw it out here for you, it's a healthcare. It's for housing. It's kind of a healthcare tie-in. Healthcare showing strength in terms of these healthcare distributors. But healthcare across the board is showing interesting signs too as prices have been going higher. They've been kind of bottoming. We'll see if it unfolds or not. Talked a lot about that in that class, but we'll see. But right over here, it's a real estate investment trust, but also kind of fascinating. You're kind of getting a flag kind of, and sort of a breakout too on this one. It's actually, yeah, it's breaking out. Some of the others in this group are not breaking out. Now, because I did mention a REIT in here, I just wanted to highlight here, we have another disclosure on REITs because it does pose additional risks that I didn't have initially. So I just wanted to verbally state this in the presentation that investing in REITs, real estate investment trusts, may pose additional risks such as real estate industry risk, interest rate risk, and liquidity risk. Okay, well, those are the two I wanted to show you right there so you can see them. Now, let's get into our shorter term time frames. I'm going to pull up, we're going to stick with this healthcare theme. All right, for sure. Now, look at this. Okay, this is Amgen, okay? Far from a healthcare distributor, right? Right smack dab in the middle of some of the pharmaceuticals that you're seeing in here. And some people would say this and say, Mike, look at this. It's showing signs like healthcare too, that it could be on the verge of bouncing. Okay, we actually took out some resistance as well. We're just barely above it, and it's showing a little bit of strength. Now, folks, when we look at that in this class, we would say, okay, there could be signs of some strength. There's some good volume in here. You're kind of flattening out. But is that really enough of a swing trade yet? Normally, we're looking for maybe 10 days or so, a couple of weeks up, and then maybe a sideways move or down slightly, and then a rally. But what's interesting here is we can actually zoom into a shorter term time frame and find ways to set potential exits that are maybe not so big. Instead of saying it below the prior day's low on a daily chart, well, that's a lot of points. That could be a lot of points on a relatively expensive stock. Like say, for example, right down through here, down there, that's $2. It's almost a $3 move to drop below that low, right? But if I move into a 30-day time frame, I just added the TTM squeeze in there too, giving us a sense of the Bollinger Band trading below the Keltner channel, identifying some real low volatility, statistically speaking, based upon the the Bollinger Band going inside the Keltner channel. What do you guys see now? Does that with more bars? It's a shorter term time frame though. Are you guys seeing now kind of signs of a swing trade that what we're saying in there? Remember, this shows compression. A lot of times we've talked about classes too. We have some too in here that we've discussed that when prices get tight like this, sometimes you can break and it might break in the direction of the pattern. The daily's giving us a basis to run, perhaps. Okay, to possibly run higher, right? The setup, it's not extended yet. I'll show you some others that might be, but now you can see a better idea. Did we clear the prior high? Could we be on the verge of this flipping? Well, we could be. This is what some of the shorter term traders might look at. All right, so we go over here. Yes, Beth, I certainly can do that. I will do that for you because I'm getting it off one of the ThinkScript scans that I created in the ThinkScript class on Thursdays for the TTM. I just put it at the TTM squeeze. I just put it on a 30-minute chart so I could pick up on these and maybe find some of these swing trades, folks. But let's look at this right now and let's examine this in terms of a price projection as well. Actually, I'm going to back that out to where we had it. That was actually better. 30-day, 30-minute chart. What I am going to do, though, is I'm going to give us a little bit of move over to the right-hand side. Let's do this. Let's just, click. All right. It's a little bit delayed for some reason. So I click, and then when I get ready to click again, it's showing up, and then it messes everything up. There we go. All right. You guys see that swing? You see the flag pattern? The potential for a swing trade. Even on a short-term basis, are we getting the trend in there? You guys tell me. Higher highs and higher lows off there. We saw some of it off the daily, but we're actually getting it here very clearly on a shorter term basis. What are we getting? Like something like there's 6.5 hours in the trading day, so like don't quote me, but like 13 bars or something more than just a single bar. So we're seeing this. T1 target right off the top, we're so tight to it. T2 target, where would that be? We have a couple of different options we could look at. We could go off the bottom. I'm going to choose this one because this was just kind of like the move right before we hit. Let me get the right one. There we go. Right off the bottom. We'll click it, pull it up to the high. Look at that. There's your target right up near the prior high. There's your 100. That is, again, the T2. I'll even put it over here so you can see it a little bit better. That's the T2 target. I'll draw this guy right over there and just show you, hey, it's coming towards some prior highs. How many times have we seen stocks come up to a prior high? We don't know if it will, but we might be seeing intraday signs of that. So what could this trade look like here? What might be a trigger for us? Well, maybe a trade above this high right there. Maybe a breakout now. So we could say something like, well, let's see. Man, that's delayed. Okay. That was a little quicker. What if I just said, hey, I just note this out. Okay. Breakout. I always put this out, question mark, and maybe just note down here, 30-minute. So this texts me when this occurs. Like that. Just like that right there. Okay. So I can get a notification of that. Again, you can set those up into setup up top, application settings, folks, and then go right into your notifications. You can have it email you, you can have it text you, whatever the case is, you can have it right there hitting for you, okay? But look at this. Now, what's fascinating about this is what about the risk factor? Could we risk less here? Say, for example, I'm looking at this. I'm going to zoom in. we're right here and we say something along these lines. We say, well, I think our prior risk was somewhere down here, but maybe not that low. But look at this low. This kind of sticks out like a sore thumb. And we're like, well, this is something like a 2-point move. A potential exit, 2 points. If we trade below this low, I'm just estimating, maybe it's a little bit more than 2 points, but my point is you can really try to get a better potential risk. Now, of course, anything can happen from day to day, and we could gap lower. That would be, hey, that would hit our potential exit level, and somebody would, obviously try to get out. So sometimes traders might wait for an indication that happens during the day, and then they're waiting for literally this follow through right here. This is a great example of this little sort of flag. All of that move happened in one day. That was a 1-day move. And so if they were to get a signal, they might be anticipating that they would get a move, maybe not the full move, but a big portion of the move in that day. Does that have to happen in one day? No. It could be spread out over a period of time. Believe me, it can go like this. It can do whatever it wants. But I'm just saying this could be another approach. And I wanted to address this because we had so many topic requests on this. All right, Levon. Hey, it does take time. This is an intermediate term class. So just to let you know, we have some beginner level classes that might be helpful too, as I'm just looking in the chat there. We've we've added to it to keep people just kind of, growing with this. But yeah, sometimes too, it can help to review these presentations, each of these with the exception of our ETF classes. I think we only have a couple of those. These go through a process of being recorded. They're normally up in 30 minutes to an hour, generally speaking. They have to go through a process to be recorded, but just to let you know on that. Okay, so I'm going to put a trade in on one of these before we're done, but I want to review a few of them. Is this resonating with you guys? This is what we're talking about today. And notice we did look at multiple time frames. We looked at a daily chart. In fact, I'd like to do this. Put them up side by side in a dual format so I can see. This was the daily. Healthcare's bouncing. Healthcare showing strength, the sector showing strength. Could that lead to Amgen showing more strength? It could. But this was strength off the bottom. This might not be enough for a daily move yet. Now it could continue up, and what we might be capturing here is just a sort of a flag pattern for a swing trade that's developing within a longer upward regular setup for maybe a daily swing. That is a true possibility. That's how the intraday looks. On some of the swing trades that we've looked at on the daily, they just go up like this in these little ebbs and flows. These are shorter term time frames that people are trading with the direction of the trend. So there could be additional opportunities in there, but it's important to understand the risks of the gap. And by the way, on a short-term basis too, sometimes, it happens frequently enough, especially if you're using some of these smaller cap stocks or low liquidity type stocks, the volatility can be incredibly high from day to day. So always be sure to park that in the back of your mind. Now, with that, because I wanted to get to Beth's point that she brought up, Beth, right over here, if you come in to the playlist, I'm going to try to just find the one for you. But folks, you can come into our playlist. We've got a lot of great stuff and encourage you to subscribe to our channel. You'd see that right over here. But for this class specifically, I'm going to click on the view full playlist. And so this is what we did more recently. We did a brand new candlestick pattern that we created. It's the Hikake. That was in ThinkScript. That is a bullish trade. And by the way, that could easily tie in to some of the swing trades that we've been talking about. So what I'm going to do is I'm going to post this link address if you wanted to see it. This is the Hikake pattern. It's a candlestick pattern. It's one we don't have just originally on the platform, but if you wanted to take a look at it, the reason why I'm going to post it is because it could tie in easily to the swing trades that you guys do. Hope that was the right one. I did hit copy. Let me just do that again, just to be sure. Looks like it is. Okay. So we did some others in here that help with timing in terms of a zero lag EMA, something new to the platform that we just built here in that class. We had some others. I'm going to scroll down just so you can see that. Oh, let me do this. This might be a better way to do this. If we go in over here, I'm going to back up. I'll try to find it. Yeah. Just click on the little search next to the playlist. And just go TTM. Cam's got some, Ken? Oh, geez. Oh, there's mine. Swing trading. What is that? Did I talk about the TTM? I might have talked about the TTM in there, but I'm talking specifically about, we did it in the swing trade class for sure. You know what? Forget it. I'm going to go back to this real quick. I think it's down here. Sometimes too, just go Control F and just say squeeze or something. That's how to do it right there. And they're all Ken. Okay. By the way, Ken's got good stuff too. What on earth? What did I call it? It's probably, I know, I think it's probably in the thumbnail is where it's at. Sorry, I'm going to have to go through that and find it. It's something I can hit, and feel free to, just, well, yeah, let's see. It's in here. I don't know where it's at. You can see some of the other swing trades, though, that we talked about, but that study, I'll tell you what, I can share that in an upcoming class, or I could try to have Brent share it, because yeah, or whoever fills in for me if I'm not in that day. All right, folks, sorry about that, Beth. But basically, let's run through several others so I can get that to you. Some others to look at here as well, okay? All right. Okay, let's see. I'm going to go back to this. I'm just going to go ahead and we'll just start with a 30-minute chart and we'll go from there. It's in there though, Beth. It's the TTM. It's the breakout. Hang on. I got to pull it up over here. Let me get it going. Sorry, I'm remembering this as I'm going on, but it's TTM squeeze bars is what I call it. And then now it's gone. It was there. So you can do this and you can set this up on a 30-minute chart. Okay, let me do this too. Just while you have it, this is on the daily chart so you can get that squeeze. What I'm going to do is I am going to share this one in the chat. It's for a column as opposed to a scan though. And you can turn it into a 30-minute chart when you open this up. This will solve the whole thing. Okay, and by the way, everybody that's viewing this discussion, I'll put it in the description section down below since we had this as a question pop up. It's just under more on the recorded video is where you'd find this, okay? So you'd find it there. And by the way, think scripts aren't guaranteed for timeliness or accuracy, but I just wanted to share this right now. We got it, Beth. It took us a little while. And here you go. Here is the code for it. TTM squeeze coding right there. And we did have a class exactly on it right there. Okay. So with that, yep, Cam's got one too. Alrighty, folks. There you have it. Now let's go back into our other trades here and get this guy rolling. What about AbbVie? AbbVie. So AbbVie, we actually looked at AbbVie. AbbVie's okay, so AbbVie, a little different. TTM squeeze, right? But look at it come down here. It's almost like, here's the 5. We'll look at the 30-minute over here. I'm seeing a potential bull flag there. See it off the bottom? There it is, coming back down. But is it giving us a signal yet? That's really the key thing, right? You have to look at it the same way you would with a daily chart. Is it giving us that entry? Maybe a break above the downward sloping trend line, closing higher, whatever the case might be. It could be very, very helpful and useful to get that. You're still waiting, right, for the signal. What about the close above the high of the low? Not day, but bar. K-Hob, right? Close above the high of the low bar. So the day. All right, let's do this. UNP was one I wanted to share. Let's do multiple time frames here on these guys. Look at this. UNP. Look at the spike over here. Now that's a rally you're seeing off some of these Some of these companies that do ship commodities were getting a little bit of a bounce. Now, some would say, Mike, I don't really think that's a swing trade yet. Okay. Question is, could it be set up bigger for a bigger move? In other words, could we see an extension from this daily into a swing trade time frame? Good. Look at this. If I zoom in on it, that is a triangle pattern. Has it broken out yet? No. But it's got some really interesting strength behind it. Do you guys see what I'm getting at here? That's what I'm getting at. Okay, and by the way, it just came out of the TTM, which could signal, doesn't have to, but it could signal an expansion of volatility, question mark. That's what makes these so fascinating, is we could also see it begin to move outside of that range. And that's what we're really trying to see here. Will it start to do that? Could it make that move? It's a different way to trade the possibility of a swing trade developing. And it could say too that you might just have more room to run here. If that were to break, of course, that would be true. But you might see signs here, technical signs that traders might pick up on that it could actually move higher. Okay, a couple more and we're all set. MDT, there we go. Sideways range. Yeah, really tight. Ooh, on the verge of maybe breaking out here. Prior high. Wow, how are we developing? That's a series of higher lows. A breakout like this could be very, very interesting too from a trader's perspective. They might be looking at it. Maybe so. That didn't work. Let's do this. Create an alert. Breakout. Question mark. All right. There we go. Got another one in there to potentially look at. Let's hit a couple more. Take-Two Interactive. Sideways. Oh my gosh, this is just a series. Do you guys see how many flag patterns are here just from this day? I mean, look at this. Look at this thing. That's what you might see on a 30-minute. Again, no guarantee it can continue, but it has been showing some daily moves, of course, but that is what some traders will look for. Like, entry points off that low and just capturing the move up here to the next, T2 target. It's shorter term, but then again, that could be of interest. All right, SBAC as a final note, kind of a sort of a sideways move here. Again, another one that could be set for a breakout. I wanted to put one trade on here just to kind of track. This is an expensive stock, of course, but what's in near the $300 range. But what if we just did that? What if we set about 284? Let's say 284. Yeah, and our target. What was our target? A target range approximately about 298, 284 and 298 for this. This didn't break yet, and it's still in the squeeze. So it's not giving us a sign, but I just want to put one in our one to watch. Actually, let's do this. If it does break out, we'll put the trade on. That's just better because it follows more along the lines of some of the general rules that we follow, folks. That was a lot there, but hey, we're dealing with multiple time frames. That's not, not so easy to get through. That's right. A Cahoe. Yeah, exactly. Something like that. Folks, if you find this presentation helpful, useful, multiple time frames today, shorter term basis. If you like that kind of concept, smash the like button. It does help us get the YouTube algorithm to get this kind of content out as well. But I appreciate all the comments and the questions being noted here in the chat. Appreciate Cam for his help as well. Love to be with you guys, and fun class. Hey, we'll catch you all next time. Have a great rest of the day. See ya.